In this lecture, we will look at currency conversion in SAC planning. Firstly, we will understand the use cases of currency conversion in financial planning and analysis, and then we will look at different options to perform currency conversion in SAC. Then we jump into detailed configuration steps and perform hands-on exercise in the system. So let's now look at the use cases. So these are the most common use cases. The first one is converting local or transaction currency to group currency. And the second one is to compare data across different currencies. If we look at the first use case, in real business planning, transactions are entered in local or transaction currencies. For example, Australian dollars or New Zealand dollars. Based on the geography the organization is placed. But group reporting requires everything in a single currency, consolidated currency. Often the group reporting currency such as USD or euros will be chosen for group reporting. Currency conversion in SAC ensures this standardization. When planners run a data action, local values such as 1000 Australian dollars are automatically translated into 650 US dollars based on the monthly average rate. So this makes it possible for the headquarters to view global financials consistently without worrying about the exchange rate differences across regions. So that's the first use case where local currencies will be converted into group currency. So a second use case is comparison across regions or scenarios. Suppose your sales team in Europe reports revenue in euros and your Asia Pacific team reports in Australian dollars. Without conversion, comparing them side by side is meaningless. So it's not reasonable or possible to compare $1 million in euros to 1 million Australian dollars unless they are converted to either of the currency, either in euros or into the Australian dollars. So we need a common currency to perform comparison. With SAC currency conversion, both values can be translated into US dollars. So for example, in our scenario, we have got the Australian dollars. Some cost centers are spending Australian dollars, and we also have a cost center in our cost center hierarchy. We also have the New Zealand cost centers where the local currency is New Zealand dollars. So then these two currencies, if we want to compare, it doesn't make any sense. So we can't compare Australian dollars, 1000 Australian dollars to 1000 New Zealand dollars. They're not equal. So we need to translate into a common currency. Could be US dollars. So this enables accurate cross-region comparisons, like checking whether Australia or New Zealand contributed more to group sales in the same reporting period. So it also helps in scenario planning. For example, you can model what happens to your global profit if the Australian dollar strengthens against US dollar while New Zealand dollar weakens. By running the conversion step in data action, you instantly see the impact on consolidated forecasts. Let us look at the options what we have in SAC to perform the currency conversion. So we have a couple of options. The first one is using the currency conversion data action type. So if we use the data action, that means we are going to persist whatever the conversions that we do. That means we are going to store the target currency amounts also along with the local currency amounts. And the second method is on-the-fly calculations in the story. So we can create calculated measures in story where we apply the conversion rates and show the converted amounts or amount in group currency in the previous example in the story. So let us now look at the overview of steps, the configuration from configuration point of view in SAC, what we are going to do in the system. At a very high level, so these are the steps we are going to perform. Firstly, we are going to create currency conversion table and maintain the rates. So that's the first step. We'll create a currency conversion table and we enter the currency exchange rates. in it. And then we'll enable currency conversion settings in the SAC model. So we have got the SAC model. So in each model where we want the currency conversion to take place, we have to maintain this currency conversion settings in the SAC model. And then setting up the currency dimension and attach it to the source or base measure. And the next step is adding a target measure in your model. We'll create a new measure to store the amount in group currency. And then we'll create conversion data action and then embed the trigger in the story and then execute and verify. So these are the high level steps that we are going to perform hands-on and see. If we look at the detailed steps, just for our information, so these are all the detailed steps what we are going to do. So first we create currency conversion table and maintain exchange rates. So, and then we'll maintain currency conversion settings in the model. Then we'll add currency property to the cost center dimension and maintain currency course per cost center. That is, for each cost center, we are going to attach what is the currency of that cost center. Attach currency reference dimension. Once we save the cost center dimension with currency property, then we will attach the reference dimension to the measure, that is the amount in local currencies. And then we'll choose the rate type. So the rate type for the currency conversion, usually there are two rate types, average rate type and closing rate types. We'll have to choose whether it's average rate type or the closing rate type. All the expense and income accounts, we use the average rate type, and for the balance sheet accounts, we generally use the closing rate types. So that we need to select whether it's going to be average rates or closing rates, exchange rates we are talking about here. And then we'll create a new measure for the group currency, that is to store the amount in group currency and maintain currency and rate type. So there also we'll have to maintain the currency and the rate type. And then we'll create a data action for conversion that we can see both local currency and the group currency once after the conversion takes place. And then add data action for currency conversion trigger to the story. Then we'll input some costs in local currency into ANZ cost centers, so that we'll have both the transactions. So we'll see both Australian dollar amounts as well as New Zealand dollar amounts. And once we trigger the data action for currency conversion, both Australian dollars and New Zealand dollars will be converted into the US dollars. So that's what we are going to perform in detail. So let's jump into the system and look at perform each and every step one by one.